Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most and do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right, no extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
All right, welcome to The Wealth Flow. My guest today is Jeremy Mercer. He was born and raised in Irving, Texas, graduated high school, and left for Lubbock and attended Texas Tech University. There he joined the Red Raiders and earned a bachelor's of business administration and finance with an emphasis in real estate. He also played football for Texas Tech as well. He currently is the CEO of Matador Realty Investments. Under his leadership, Matador has completed $105 million in acquisitions, totaling 1.2 million square feet and managing $165 million in assets. Jeremy, welcome to The Wealth Flow.
Thank you, Keith. Thanks for having me, man. Appreciate it.
Yeah, always good to have a fellow Texas Tech guy on the show. I wore the shirt just because I started reading your intro. I was like, all right, I gotta go change.
Yeah. Get your guns up, baby.
That's right. That's right. So, but yeah, if we could maybe start. I typically can't wait to get into your story, but I always like to start really with where people did grow up, and it sounds like for you that was Irving, Texas. But tell me a little bit about what led you to Texas Tech, playing football there, and then eventually into real estate.
So grew up in Irving, Texas. My brother and I, my brother he played football at Rice, and he never dated one girl at Rice, and so when it came time for me to get recruited, he said, we got to find you a school where there's girls at. So Tech was playing Oklahoma State in Texas Stadium, and we went to this recruiting deal, and they gave us tickets to the game, and I was just looking around in the stands, and told my brother, I said, if this is an away game, the home games have to be incredible. So I don't know if that's how you're supposed to pick where you're going to go to school, but that was kind of what led me out there. And then I was recruited by a coach I really liked out there, and just went out there and visited, and really never had any ties to Lubbock. It was the first time I'd ever been to Lubbock, and but that's how I ended up out there. And then I had always thought I wanted to be like a sports agent when I was done, and so when I was my senior year in high school, I was talking to my high school football coach, and I was like, hey, do you know any agents? I'd like to talk to an agent and see what I need to do. And I talked to one, and he said, you need a major in finance. Once I got into to school, I was like, I don't know that I want to be an agent. I maybe want to do real estate. So then I just switched to the real estate emphasis side. But yeah, so I was on the football team for 2 years, and then I got injured and just kind of had to hang it up at that point. But met a lot of really good buddies. Got to go to some bowl games, or a bowl game. We got suspended 1 year, so we didn't get to go. But it was a really good time, really good experience. I still hang out with a lot of those guys on a regular basis, and there's developed some pretty good, deep relationships there. So
cool. Yeah, that's awesome. It's definitely a different place. There's not a whole lot out there, but big sunsets and lots of lots of fun. So yeah,
Yeah.
still
Yeah, for sure.
enjoy it. So from there,
Yeah.
you moved back home.
So I moved back home. My dad had a steel company that did distribution for specialized tubing for like aircraft and stuff like that. And so I'd always kind of worked there at the metal shop. And I came back, started working for him, realized I really wasn't going to make any money working there. And then I've been a musician my whole life. I was living in Euless at the time with some friends. We rented a house and we were raising a bunch of hell. And the neighbors were like, "Hey, we really don't like y'all." I mean, we just didn't fit in. It was like a family neighborhood, and
Right.
we were still in college in our mind, right? And so one of my friends was like, "Hey, man, I want to move to Deep Ellum," and I said, "Okay, I got to find a place to put all my music stuff." And so I found this rehearsal studio, which was a 20,000-foot industrial building with 55 rooms built off into it. Imagine like a public storage deal, and so I was like, "Oh, this is incredible. I wish I'd known about this in high school," you know. And so I moved in there, and then about a year later, I got the opportunity to buy it. The guy that owned it was kind of like, and so I was still working for my dad at this point, and but I was like, okay. And then about that time, my brother had gotten into industrial real estate, and he was working for the Robert Lang Company, and he started buying industrial buildings in the Stemmons corridor. And he was like, "Hey, do you want to start managing these buildings for me?" So I was like, "Sure," and then about the same time we put the studio deal together to buy the studio. I bought the business and I got my brother to buy the building, and they cross collateralized the notes for the business and the building purchase. And so at that point, I started running the studio and just managing a bunch of buildings. So I started managing probably about 250,000 foot of industrial over about 30 tenants just right in that area. And that was just kind of like my introduction to kind of really learning the commercial side. We'd always kind of worked on residential, and we'd always worked on residential. We were chasing pre-foreclosures and stuff like that. So I was always knocking on people's door and cold calling them, people in a really tough situation. Honestly, they're fixing to get foreclosed on and trying to buy their house and stuff like that. But then my brother really started transitioning into the industrial world. So, me and my brother just always kind of worked together. And I, so I'm running the studio and running properties. And then eventually I, kind of got sick of property management because it's kind of a whip. But, and then my brother was
Right.
like, "Hey man, why don't you," and then during this time frame, he had started Mercer Company. He'd left Robert Lynn and started Mercer Company, which is just a commercial real estate brokerage. And he was like, "Hey, why don't you come broker? I think you'd be really good at this." And so during that time frame, I ended up doing that and going off and, started brokering. And I took my whole portfolio of properties and gave it to Robert Lynn, and they started their property management division off of it. And I from there on out, I was just brokering. So
Awesome.
but
And
yeah,
specializing in industrial, or was it across the board?
yeah,
Any type of commercial, or what were you on?
all industrial. And I worked. We do sub market when we brokered. We did sub market specialization. So we would farm a territory, and my territory was the Stemmons Corridor, Brook Hollow area. So bunch of old buildings built by Trammell Crow back in the 40 or late 50s and early 60s. So, low clear heights, bad truck courts, but, a lot of owner users down there. So I worked with a lot of local business decision makers, a lot of local business owners making local decisions is what we were really good at. And did a lot of building sales because a lot of those guys wanted to own their building, but we'd also do a ton of tenant rep, a lot of leasing, and you kind of do it all down there. And when you're doing sub-market specialization, so
Yeah. Okay. Interesting. And then from there, where did things progress?
I started brokering in 2010. In kind of the interim of all this, I had purchased my dad's steel company and moved it to Brook Hollow.
Hmm.
I bought it off of him, and I had grown it to a point where it really didn't need me to operate it, and so, but I kind of had it in the neighborhood I worked, and so, but then I eventually went and bought another steel company, and in the middle of all this brokering, and that's when I screwed my life up, but probably when I learned some of my best lessons, and bought another company, folded these two companies together, and took on some partners, and actually had one of the partners come up with a lot of missing money in our books that our partner was touching, and got in a massive lawsuit, went through all that. Then we ended up getting that partner out, and we sold the company in 2018. And at that point, that's when I was like, okay, I got this off my chest, and I was still brokering hard the whole time. I'm like going through this lawsuit, brokering every building I can. Almost went flat broke pretty much in the middle of all this, but learned a ton of things throughout that whole process. And then about 2018, there's like this influx, and like, I want to say 2017, 2018, all these private equity companies went to some conference and came up with all these buzzwords like urban infill, core, last mile, all these things. And that pretty much just pointed to Brook Hollow, right? Because Brook Hollow is just touching all the major park cities and all that stuff, parts of Dallas. And we're going through it, and all this money starts coming in. All these guys are like, hey, I bought, we raised however many millions or billions to buy, industrial buildings, sell us industrial buildings. And what had happened was there was a group, it was very interesting. I thought this was very smart on their part, but they wanted to buy in that area a lot. They really loved that area, wanted to buy in that area. So they officed down there. And there's a group called Cantex, and really two brothers, really sharp guys. And I started selling them a bunch of buildings, and I was buying every building with them. And eventually I just got to the point where I was like, man, I don't want to broker anymore. And I really want to start buying and syndicating assets with investors like you guys are doing. And they had purchased a property in Little Elm area right on the Frisco border, and they bought it for like $400,000. And they were at their point in their career where they shouldn't have bought that. It was way too small for them to mess with. And I said, hey, mark it up $100,000, give it to me, and I'll syndicate it and buy it. So it's the first deal I ever syndicated. I was like, I got to raise $250,000. So I mean, I'm just trying to hustle all that up. And but that's kind of where it started in 20. That was February of 2020. Then obviously the world shuts down after that, mm-hmm. And we end up buying one more building that year. And then I was like, okay, I think I've kind of got this figured out. I need to like formalize it and form a company to actually go do this. And so then 2021, I kind of got after it pretty hard. So first year we only bought 1.5 million. 2020 we bought 1.5 million worth of stuff, and then that was 2020. 2021 I bought 35 million worth of stuff, and then 2022 we bought 56 million worth of stuff. So it just started kind of rolling. Last year we only got to buy about 29 million, but obviously market's gotten tougher to connect on numbers. But yeah, so that's kind of where we got to. So I kind of hung up my brokerage cleats in 21. Me and my brother said, he goes, what do you want? My brother and I were talking. He goes, what do you want to do? I go, I just want to buy buildings, man. Like I want to buy a bunch of buildings and just go from there. So anyways, yeah, I bought that building off of Cantex, and we kind of went from there, and still really good friends with those guys. And, we kind of just trade secrets now together, so,
yeah.
But yeah, I had, hung up my brokerage cleats, and I still broker a deal here and there for clients or renewals and stuff like that, but just really focused on growing the acquisition side of Matador on value add industrial stuff. And we've actually started a structured finance fund that we're, having our initial closing on June 30th, where we're doing preferred equity and first lien for other investors. So
okay.
Just kind of expanding the product mix. So
yeah, no, that's awesome. Hey, maybe before we go too much, I have a lot of questions for you with respect to kind of that journey from 2020 forward, but just curious, and if you don't mind, maybe we go back to some of those lessons you learned, in the partnership, buying that other steel company, folding it in. I mean, I know there's a lot of folks on here that are listening that they can make some of those similar mistakes. And so I always like to just kind of
Yeah.
hear what those different challenges are, because you made the comment, and you almost went broke during that time frame. And
Well, I did. I called several bankruptcy attorneys to ask them, how does this work?
Huh.
And you know, what I learned was bankruptcy was just I wasn't, going chapter 7 on it. I was going to try to reorg, and I was like, you know what? This is just expectation management, right? So I just I went and either in person or got on the phone with all of my vendors. And I said, look, this is what happened to me. Here's my court case. Here's all this. I'm going to pay you. I just can't pay you right now.
Yeah.
But I will answer my phone every time you call me. If the update is I have no update, I'll still send you that I have no update. There's going to be weeks where I have to make payroll and I can't pay you. And the other week, I probably can pay you. And then going forward, I will pay you COD for all my materials. So I just started paying cash. Yeah. And, that was just being very transparent and honest with those vendors kept me from having to do anything. And they just worked with me. No one ever got mad at me because I'd literally send them, here's my cash flow. And I can pay you, I owe you, $40,000. Well, I probably have, 6 for you today, and then I need some more material. I'll pay you COD. And so it was just kind of a combination of working off my bill, paying cash in advance. The other thing I learned was, I kind of knew accounting, but man, after there's some holes and things like that, you really learn accounting. So, my accounting acumen has gone up 100-fold since that. And so, what I learned is another thing too, is you got to be real careful on who you pick for a partner. And, especially in an operating company, a piece of real estate is pretty easy. There's not a ton of decisions to be made on, hey, we're going to buy this property. We're going to lease it to this tenant. We'll collect the rent. We'll pay the mortgage. We keep the spread and send it out. Mm-hmm. Right. When you have a business, there's probably 500 decisions that come into that, that come into play there. So what I learned was you better be real. If you're one, I will never take another partner really in an operating company. If you're going to take a partner, you better understand that they can literally go to jail and they're still your partner because the courts view it as a civil matter. So if they murder somebody or they go out drunk driving and kill somebody, or they go to jail, or they fall off the deep end, they're still your partner, and it's a civil matter. So you got to go work it out. And, so that's a real thing. And I was always just a forever optimist that, nothing's going to go wrong. Well, it went wrong bad. So I learned really how to just manage expectations of my vendors and get me out of that situation. And then, man, I got in with some very large manufacturers that blew my business up, but I was still flat broke, and I wasn't bankable when I came out of that lawsuit because we were just broke. And so I got hooked up with a debt fund here in Dallas that gave me about $800,000, and we had the opportunity. We needed some new equipment, and we needed a couple things to kind of right the ship to get on board with Siemens. And they made that investment in me. It was really expensive money, but at the end of the day, it bridged that gap and got me out of that. And it was a CPA firm here in Dallas that also just had a debt fund. And so I learned a lot by having just a deal guy that, so they would put a guy on me. They had a monthly management fee where they would come in and help consult on your business too. Because they're one, they want you to make it so you can pay them back. And then two, they make fees off of it. But they hooked me up with a guy. Me and him really hit it off. And man, he helped me really right the ship. He was a CPA, learned a ton of accounting from him. And we fixed it, man. And then we got to a point where we were hitting we were growing so much. It just kept getting so capital intensive. I was like, they were like, we had just like a team meeting or something, like a planning session. And they were like, hey, you need to take on more debt. And I was like, I'm not signing up for any more debt.
Yeah.
Like if anybody else in here wants to sign personally on the debt, they can do it. And maybe we can look for it. And then they go, well, you need to sell the company then. I said, sounds good. Let's sell it. So at that point, this was probably in August of 18. And I went and I said, we went and interviewed a business broker. He was really good. I'll be honest with you. I've never had a great opinion about business brokers. I interviewed this guy. I thought he was really good. But at the end of the day, I was like, I'm a commercial real estate broker. I know how this is going to work. I need to call the top 15 guys that would buy this kind of thing.
Mm-hmm.
And so that's what I did. I just lined out 15 strategic buyers, and I had a couple family office, financial buyers. And that's what I did. I started cold calling them. And I was like, hey, I want to sell. And one of my steel suppliers had a customer that, had always mentioned having some interest. And I reached out to them, and they came down and they toured the facility, and they came back and they said, they called me the next day. They go, hey, we'd like to buy your business, but we're not going to pay you anything for it. And I had about 2.8 million in personally guaranteed debt between machinery, the debt fund, bank lines. And that was like a 6x multiple on my income at the time. So I was like, this is actually a very good offer. So I was like, I'm going to call you back in 5 minutes. And so I called, I had one other partner still at the time. And I was like, hey, we're doing this. Like, I'm out because I ain't putting any more money into this. And so that's what we did, man. We sold it. And the other thing I learned too through that was, we had a 30-day due diligence process, which is very quick for purchasing a company. Mm-hmm. And, they brought in a full team of auditors out of a pretty big CPA firm. The audit was scheduled for 2 days. We were done in a 3/4 of a day because every time they asked me for something, I had it. What is this? This. Like I had the answer. I knew where everything sat in my business. And that put the auditors at ease. They're like, all right, we're done. Like this is all pretty airtight. So, the one thing I learned is out of that too was like, man, like, and I've sold a couple companies for people. Just you kind of stumble into that in a commercial real estate transaction every now and then because businesses kind of flow with commercial real estate, right? Lease expirations are major decisions in life,
right?
And or debt maturities are major decisions in life for people that either own their building. And I've seen so many people just not focus on the accounting back office side of things, and when it comes time, I've had many of my clients be like, Jeremy, do you think you could sell my company? And I'm like, well, let me see your books. They're like, oh, well, I'm 6 months behind on my books. I'm like, I don't know what to tell you, man. Like,
yeah,
call me when it's like, but the small business owner, man, that is 101 for them. Like 9 out of 10 of them just don't have their stuff together on that. And I learned having that together provided me to be able to close a deal in 30 days. So
yeah. No, that's huge. Yeah, that's interesting.
Yeah.
And then the just the fact that plus just you were able to weigh it out and say, man, I can get rid of this at this point, right? Even with just them taking care of everything that I personally am guaranteeing. I'm not walking away necessarily with something, but I'm walking away without that, baggage and allows you to focus on the things that are more important. You said something else too that I thought was interesting. And it's just the fact that you told the different vendors, I'm going to answer my phone. I can't understand how when things get tough, we're seeing it right now. I've got a lot of friends that syndicate and different things, and some of them have friends that they've placed money with, and communication falls off the roof. It's like it all of a sudden it's very difficult to get in touch with them, to engage them. People understand, hey, I don't have an update for you, but if you are sending them to voicemail when you used to answer, that's just not a good deal. So,
It's funny. We take that same approach with Matador. So we have on the first of every month, we have what's called a Mac Cap recap, where every single property gets an email about what's going on at the property. And if it's, hey, we collected rent again, see you later. That's it, but it's something. And then we make monthly distributions on the 15th. So, for stabilized assets. And so our investors are getting touched twice a month. I took that approach because whenever you're brokering and you have a listing, it's the worst whenever the owner calls you before you've called him with an update.
sure. Yeah.
Cause he's like, hey, I haven't heard from you. And you're like, you're backpedaling all of a sudden. So I was like, hey, I don't want any of these phone calls. We have a lot of LPs. I don't want them calling me. So I'm just going to over communicate to them and they really won't have any questions past that. So that's, but and I've had numerous investors that are like, hey, we're in 10 other syndicated deals or we're in 10 other funds or whatever. And your communication is better than anybody's. And I was like, well, I don't want you to have to ask me questions. Like you shouldn't have to ask questions,
For sure. No, that's a great approach. And so then going back to, so you've been brokeraging these deals and really spending time in that, and you're starting to see just, from your clients that you're working with, hey, here's something that they're doing that I'd like to, get into. Ultimately, right? You don't, brokeraging is very transactional. I'm sure, it's still somewhat transactional. You're still buying stuff, but it's, brokerage, that's what you do every single day with it. But here's an opportunity to, what was it about what they were doing, I guess, is that you saw that attracted you?
Are you saying like on the investor side, what those guys were doing is, honestly, it's funny. We've always bought buildings. Like I think the first industrial building I bought, I was 24. I bought it with my brother. We've always been doing that. But what really intrigued me were waterfalls. We never used them. It was always heads up deals with all these people, and we're doing all the work, and signing all the debt. And I was like, I went into my brother and I go, "Do you know about this? Like, this is how everybody else does this."
Yeah.
I was like, "I'm going to do this," and I was that was a big part of it. And I was like, okay, well, I can make that much. And, I just honestly, man, I needed something new. Brokerage is a great way to cut your teeth, to really learn real estate, learn how things go. And I think a lot of things in my background made me a great broker. Being a property manager prior to it, I knew the lease. I knew how the lease worked, so I could take, and then owning a company that had actually moved, I'm like trying to convince someone to move their warehouse. I've done it. I've lived it. I know how terrible it is. It sucks. It's a beating. But, and I always say, if you've never made payroll, you'll never understand. And so I've done that. So I could always relate to a lot of the local business owners because I'd lived that. And, but what I saw on the investment side was like, I had two situations happen to me that I had a building that I got agreed to because I knew it was a great deal. It was a 242,000 foot building in Brook Hollow. And I got it agreed to at $31 a foot. And I knew the building next door just sold at 42. And I tried to convince everybody in the world to buy it with me, and no one would buy it with me. I got the contract. I needed $100,000 in earnest money, and I didn't have it. So I couldn't put it under contract. Another group did, put it under contract at 31 and flipped it for 57 a foot a year and a half later.
Holy cow.
On 242,000 feet. And I was just, I had this. Another deal I did, I had some investor and call me, said, I want to buy buildings down here. And I knew there was the Mary Kay manufacturing facility, and it had an out parcel 136,000 square foot building that I knew the buyer the new owner of the Mary Kay facility, he was a metal fabricator. That's how I knew him. We were competitors, but he was always a good friend of mine. I said, "Hey man, you're going to lease that out parcel, but would you sell it?" I made an off-market offer at 65 a foot for this investor. We got under contract. I told the investor I wanted to buy it with him. He wouldn't let me. Then while we're under contract, the investor tells me, "I'm not closing on this unless you get me a tenant." And he's adamant about it. And so while we're under contract, I make all these cold calls and I find a company called Lone Star Electric and I get them to agree to a 7-year lease. So the day we closed the building, they executed a 7-year lease. He puts $10 a foot into the building. And so he's in it at 75 and he tells COVID hits and he tells them, "Hey, for the price you're paying in rent, your mortgage would be the same if you paid me $105 a foot for the building if you want to buy it." So they buy it. He makes, what is $35, 30 bucks a foot in spread on 136,000 square feet. And I was like, I did all this.
Yeah.
You just money. And so at that point I said, you know what? These guys, they call me from their ivory towers and they tell me how much money they have, but they don't know anything about putting these deals together. And I was like, that's what I know. I just need to figure out how to raise money.
Yeah.
So that's what I did. I was like, I want to do this because why are we making all these guys money? And so that's what, a lot of it now is a lot of guys invest in me with other brokers. I'm like, look, don't send it to those guys. You just buy it with me and let's just go do it. So,
yeah.
So that was kind of motivation for it.
That's awesome.
So.
And the first one that you actually raised capital on, I know you'd bought buildings before that, but you said how much was, what size sale was that?
It was $500,000.
Okay. And that one you raised, how easy was it to raise?
It came easier than I thought it would, but
Okay.
I had to go have a bunch of in-person meetings and all this stuff, but it taught me a lot. I built a really good deck for it and all this stuff. And, it wasn't as hard as I thought. And what I realized was a lot of the people that invested with me on it were my former brokerage clients that, I'd sold them a building. They knew I knew industrial real estate. There wasn't a fear of, this being very odd to them. And so, it kind of made it pretty easy, but, I had to put it all together. It was stressful. I was doing everything, I was, creating the operating agreement, calling for the wires, verifying wires, but we got it done. So we still own we don't own the asset anymore. We're actually the lien holder on the asset now. We sold it on owner finance. So.
Oh, cool. Okay. Yeah, that's not a bad way to be either. So
yeah,
cool.
Yeah.
And then you grew pretty quick though. You said, what was it? After that first one, that first year was what you guys acquired 1.5, did you say?
Yeah. So we bought that $500,000 building and actually an $800,000 building. So 1.3. And then the next year I bought 35 million. Bought 35 million. And then the next year we bought 56. And, so yeah, Will, our director of acquisitions, he always tells me, he goes, "I think you underestimate your ability to raise capital." And I'm like, I'm like, oh man, no one's going to give us the money for this. I'm always down with that. So, it's always worked out. I've never not raised a deal. I've never not capitalized one. So.
Yeah. Oh, that's great. It's cool to see how quickly you were able to go at it. And then, sure, dial back a little bit due to the most recent, with rates and everything. Just it's gotten a little bit more difficult right now, but there's still stuff out there for sure.
Yeah.
So, yeah. And you mentioned value add on these. So tell me maybe a little bit more about that strategy. Like, what are you looking at? Value add's kind of a big box, right? But what specifically, when you see something, are you like, hey man, I can do this, this, and this?
So we kind of really fall into a couple, I guess you call them subcategories of industrial. We don't buy the big Class A warehouses. There's no real money in those things or no yield. I mean, it's just a different capital structure. But what we like to buy is either a single tenant asset that has some kind of land component with it, our tenants are people like Caterpillar, Sunbelt Rentals, those kind of facilities. Those are the kind of things we like. And that comes from my brokerage days, because I worked in the Brook Hollow area. There's Irving Boulevard, and Irving Boulevard is all trucking centers. And I got to the point where I was selling all the trucking guys sites, and it was just so hard to find them. It's so impossible to find these. They call it iOS now, but like back then it was like, hey, I need a 10,000 foot shop on 5 acres. And you're the guy to do that, right? Because you did so-and-so's trucking deal and so-and-so's trucking deal. And I was like, I got to the point where I didn't want to take on buyer or tenant rep assignments on it, because it was terrible. You couldn't find them. So I was like, I only want to take listings, and because they lease immediately. So that's kind of why I like those types of properties. It's like, there's a need for that in DFW. You got to be careful on the market you're in, right? Like, you go to Midland, Texas, every building has a yard with it, right? So that's nothing unique out there. But you come to Dallas, it's not these equipment, getting that outside storage is just, it really helps the lease up time, right? So we look for those. We look for also these business parks. We call them small bay parks, where you'll, there's usually a situation where the owners never really raise the rent, and the tenants don't bother the owner about the deficiencies of the building because they know they're paying way under rent. So
Right.
we will go in, and then no one ever makes them sign up for a real lease. Or if they do, it's only 12 months, or it's month to month, like, just very disheveled ownership, organization. And we come in and organize it and do capital expenditure to the property, and we mark to market the rents. And sometimes people really hate us for it, but I mean, I always tell I always try to work with the tenant, easing them into that number, and I always tell them, say, hey, look, we don't expect you to sell your products for 30 cents on the dollar. And we would ask that you don't expect us to do the same either. So, we'll help you transition to this rate, but, sometimes they move, that happens a lot, but that's okay. Sometimes businesses only survive at those kind of rental rates. And so they really weren't a business to begin with, and it's kind of more of a hobby, and but that's where we find a lot of success. So we'll take the NOI on something from, 100,000 to 300,000, and create that value through there. So.
And ultimately, as far as the investors go, are you at that point selling them, or what? What's the exit strategy?
Exit strategy right now is just we're kind of we're of the mindset that if someone pays a number, they're going to own it. But we're not active. We haven't really actively put anything out there on the market to sell it. We're co-invested in all these deals too, and we get a lot of distributions out of it, and so it's so we'll probably sell a portfolio at some point just to get a big exit and get a big pop, but for the most part, we like to hold them and cash flow them. So.
Yeah. Okay. Very cool. And what, I think probably that brokerage, obviously your brokerage background helps out with that. When you look at the, you mentioned it, obviously the real estate piece of it or the building piece of it, but then having a yard, how big of an area are most of those companies looking for? And I guess I'm assuming that's all truck storage, that kind of thing for their equipment.
Yeah, or it could be, a building material supplier, right? A roofing supply house, a lumber yard, something like that. I would say a wheelhouse type deal is 20 to 30,000 feet on 3 to 4 acres. Like that's a very good size right there to lease quickly, have a lot of demand for it, and so. I'll tell you, it's funny. My dad, back to my dad owning that steel company that we bought. My dad built a building for that steel company, and that building was 18,000 feet on 5 acres, which was the best investment he made. Not the steel company, now we have that building leased
Right.
30,000 a month net, so.
That's awesome.
So, yeah.
Very cool. And then you said that you've recently started a structured finance debt fund or structured finance fund. Tell me a little bit about that. What does that mean?
So I've always ended up loaning money on things. I just kind of stumble into either owner finance, or I'll tell you what, that's another thing that came out of the steel company kind of going through those situations. I got hooked up with that debt fund and I learned what they were doing, you know,
Mm-hmm.
and I was like, man, I don't want to they do it with operating companies, but I was like, I don't want to do this with operating companies unless I can attach to real estate. And uh, I just had a couple opportunities, and me and Cantex did them. We'd loaned some working capital on a deal on a company that we attached to their real estate. Ended up refinancing the real estate, cashing out our money, owning. He gave us equity in the real estate. We sold it. We made a great return. And then I still have a couple owner finance notes out there, and I learned that I can get banks to give me note to note receivables financing. So I can lend the bank's money out and make spread. So one of our notes we have right now, we're paying the bank 4.25%, and we're loaning their money out at 8%. And then we're loaning our equity out at 8%. So the effective yield on our equity is like around 20%. So, I have, like I said, a lot of my investors are some of my older brokers clients, right? They've owned a business for a long time and maybe they've sold their company now. And I just started seeing a need for like assets that cash flow immediately. So a lot of my investors are like, hey, I love the value add. I know you're going to make a bunch of money on it, but a value add project could take a year to a year and a half for distributions to begin, to
Mm-hmm.
work the business plan. So what we looked at and ended up finding was, I was like, I've always lent money on first lien. If I just market myself properly, I'll find first lien opportunities. And that's, sure enough. And so I was like, and then we got into loaning, you can call it loaning, but it's also called preferred equity. And what I realized is there's a lot of single tenant, like net lease retail developers. Call it a guy that's going to go build a Starbucks or a Murphy's USA, a Circle K or a grocery store. And they have these merchant developers, they get in and get out of these deals quickly, right? They find the land, they get the lease signed, they build the building, they get out. And in some instances, they're just ground leases. They get the dirt, they ground lease it on a 20-year deal to Murphy's USA. Murphy's builds the building. As soon as the building's halfway up, they're selling the dirt to a 1031 investor. Well, those guys will use what's called preferred equity because they can keep more of their back end than taking common equity in the deal. So we'll come in on a preferred equity spot and maybe cut $1 million check to a guy. We have a signed lease at closing with, a great tenant on a 20-year lease. So that's the safety valve if the deal goes bad. We have controls over the operator and in the event he screws it all up, or the sponsor. And then we make probably 2 points going in. We get paid 16% current and a point out usually on those deals. So we're making a 19% effective yield on just being the equity and just sitting there. And that allows the developer to keep a lot of their back end. And we'll do the first lien and the preferred equity piece for the developer too, if they need that. Sometimes they have their own banking relationship and we'll go do it themselves. But yeah, that's and so what's great about that is we'll pre-fund, so obviously if it's a piece of dirt, the building's not up and the tenant's not paying rent yet. So we'll pre-fund a year worth of payments, and then we start getting distributions immediately on the deal. And we can start making distributions to our investors immediately, within 30 to 45 days of closing the deal. So I just saw a real need for that. And I have a family office that invests with me, and we started doing a bunch of these deals. And what I realized is you get a call, and it's so funny. These developers will have this site under contract for 180 days. And the last 2 weeks, they're like, hey, I need $1 million. You want to do this deal with me? And it's, you can't syndicate $1 million that quickly, right? I mean, you probably could, but man, it'd be a whip. So I was like, I need one check writer for this deal. Damn it. So, me and this family office kept doing them. I was like, okay, look, if I want to keep doing these deals, I got to go to a fund model because these deals are in and out so quick. They're 12 to 18 month deals. And, I don't want to have that many tax returns, right? And it's just punitive on the return. You start diluting the return by having to spend that much money on that many tax returns.
Yeah.
And so we decided to go to a fund model. So we have certain assets we're going to contribute to the fund when we close. And yeah, it's a very scalable model too. I love the value add. We're continuing to do that. We got a bunch under contract right now. But what I learned with this, I went to ICSC. I don't know if you're familiar with that, but it's the International Council of Shopping Centers. It's the retail. They have it every quarter. They have it in a different part of the world, but it's the convention for retail real estate. And imagine a trade room floor where at one end, a trade show floor where at one end, there's every real estate developer for every single tenant you can think of. Chipotle, Starbucks, McDonald's, Quick Trip, whoever. They're all standing there with the booth saying, "Hi, I'm the real estate director for XYZ company." And in the middle of the trade show floor is the brokers, JLL, CBRE, Marcus and Millichap. They're all sitting there. And then at the end is the developers. Everybody knows what everybody's making. So the spreads are smaller, but it's like trading a bond, right? It's like when we get a deal brought to us, I can call Northmark and say, "Hey, I'm doing a Murphy's in Louisiana. What is a Louisiana market trade like?" And within 5 to 10 minutes, I have 30 comps of Murphy's fuel stations that traded in tertiary markets and what those cap rates were. So then I can look at what the sponsor's building to and say, "Man, this guy's got 300 basis points of spread. That's a lot of juice on this deal. So I feel comfortable investing in this tertiary market." Whereas industrial, there's still a ton of arbitrage left in it, right? Because no one cared about industrial until 5-7 years ago. When I started in industrial, we used to give buildings away for a year so that people wouldn't vandalize them, And but now that no one wants to invest in office, they've all shifted their focus into investing in industrial. So there's still some arbitrage to be made, but I think the scalability of the debt fund is a lot higher. Obviously, it's lower returns. We're hitting 12 to 14% returns for LPs on it, but it's consistent cash flow. Like the deals start paying immediately. So we don't do equity unless we have a signed lease at closing. Just take all the guesswork out of it.
Yeah, very interesting. So do you think that's where you're maybe going to, I know you say you're going to keep on doing the value add stuff and obviously keep maintaining that with Matador, but this is another area that you feel like you're going to really double, triple down on?
Well, I just think what it also does is it brings in deal flow for the value add side. Because once you start chasing debt maturities and people that got decisions to make, it could just be, well, do you just want to sell it to us and we'll just buy it? Or maybe we're your takeout partner to hold it, right? Like maybe you have a signed lease at closing with a tenant we like, and we'll just pay you the development fee and we'll own it, So there's a lot of, so it's really increasing deal volume, right? So we're very into knowing our math on deal volume, on how much we see. So every week, we have our weekly Monday meeting. We track how much we saw last week. And we average now. So last year, I can tell you this. So last year we saw $2.5 billion worth of deals. And this is any deal, right? This is any deal that meets kind of our criteria. Like, hey, here's a building. The building could suck, right? But we log it. We track it. So last year we saw $2.5 billion in deals. We offered on 501 million of it. And that was across 444 assets. We offered on 500 million of it and bought 29 million. So that's the distilling process, right? Now, the interesting thing to talk about what the market did is looking from the previous year in 22, we saw $1.25 billion worth of deals over like 200 assets. We offered on 250 million and bought 56. So you can see that tells you how tight the market got last year, right? And so now in our average, we've already seen this year. Now we've gotten our marketing up and our deal flow up. Now we've already seen $1.5 billion this year so far. So we'll see more this year and make more offers. But so I say all that to say, we just try to, that's a big number I watch. Like if I saw we looked at 100 million last week, great. That means when someone brings me a deal that I'm on the fence on, I can just say, wait till
Yeah.
next week. There'll be another one. That's keeps you from having to force it. So that's how I know, what we're doing to try to generate leads is working. So
Yeah, for sure. So, and as far as generating leads, what are you reaching out to individual? I guess you're making contact with a lot of the people that are involved with these types of deals, huh?
yeah.
Is that really where you're coming across your stuff? Just
Yeah, so we do we work through a lot of brokers and
Mhm.
Will, our director of acquisitions, like his job, he has cold call goals every week to cold call brokers and just, stay in that deal flow in the markets that we work in, I just kind of organically talk to a lot of the brokers just because I've had relationships with them forever. Another thing we do is, we've got a podcast too where, it's very broker focused. And so a lot of the brokers look at it. So we have two formats. We got one, it's called Shop Talk, where Will and I just talk every week for about 20 to 25 minutes about stock market, oil, treasuries. What are all these things doing? Just some real estate stories, that are in the news. And then the other episode we have every week is called Confessions of a Street Broker. So it's I'm interviewing every top broker. So every broker is listening to this
yeah.
podcast, right?
Oh, that's
And they're all
awesome.
like,
That's great.
I want to sell this guy buildings because he's lived what I'm living right now. And he's interviewing the guys that I look up to, So that's generated a lot of deal flow too. So
Yeah, that's awesome. That's
yeah.
great. Jeremy, this has been really cool. I know we're running just a little bit long on time, and but I've enjoyed it. Um,
Yeah.
couple questions, I guess. Well, first, number one, how can people find out more about you? How can they reach out to you if they want to invest with you?
Yeah, just we're probably through our website's probably the easiest. It's matador-capital.com. That will be changing to matador.net here pretty soon. So but internet's probably the easiest. We're on the socials at JB Matcap, Twitter or X, I guess now, and Instagram. But yeah, I mean, just give us a call. We're having an initial closing on our fund, and we're going to continue. We'll have 4 other closings on it throughout the year, and but yeah, no, we're active. We're buying. We're not stopping. We, so we're
Yeah,
around.
cool, cool. And well, I got two other questions for you that I ask every guest. One is just, what advice you might give somebody who's just starting out in their investment journey.
As far as sponsoring deals or investing with other people,
You can pick either one. Either one.
I think I'll talk about like investing with other people,
Mhm.
just because it seems like that's probably more of where people lie. I think the biggest thing that you have to understand with whoever you're investing with is like how focused are they on what they're looking at. Like, like, are they agnostic to real estate type? Are they bringing you a medical deal, and then the next week they're bringing you a office deal, and then they're what I mean, like,
Mhm.
so I think that's one thing to consider. Read the OMs that they provide and look for errors. I think that's a big thing to look for. I've seen some where I'm like, I have a lot of people send me OMs to read for them. They're like, "Hey, I'm looking to invest in this. Will you look at this and tell me what you think?" Yeah, and I will kill a deal for somebody if the sponsor's not investing in it. That's a big red flag for me. Like, if they're not putting their
Yeah.
money in it, then why should you? Um, and then just look for errors like math errors. That's something I look for. And then look at their track record, right? What have they done? If, when someone calls us to invest with us, I immediately say, "Hey, I'm going to send you a deck with our track record on every single asset. I want you to read all that. And then I want you to call me when you're ready to talk. But before then, we're not going to have a conversation. I want you to get all your questions ready." So I think the other thing too is to figure out, how do they report? We talked about that earlier. People invest money with people and then they don't answer their phone. Like, you
Yeah.
know, that's not a good feeling as an investor, right? That's like, you're like, man, it's human nature to feel like you just made a big mistake, right? And so understand how they report. And then I think most importantly, ask them when they're going to get their K1s out, because that's a big thing. I'm sure always waiting for a K1. So, but I think you just need to understand the asset class they do, understand what they're doing, understand what they're investing in, and vet them. For me, the best recommendation I ever get is when one of my investors introduces me to someone. They're like, "Oh, hey, we've done this with him a lot." So that's always a good. If someone else has invested with them and lived through the process, that's always a great way to find out too. So,
yeah, for sure. No, I think that's great advice. That's awesome. One last question for you, Jeremy. And again, I've really enjoyed this. This has been great. You're just a ton of knowledge and very sharp, and I just love everything you're talking about. How about book recommendation? Anything you've read recently? It doesn't have to be real estate related, but it certainly can be. Just something that's been impactful to you.
The most impactful book I've ever read was called "The Greatest Salesman in the World." It's a book. I read this article about Matthew McConaughey, and he was talking about being in college, and he read that book and he quit. I think he was a political science major. He quit that immediately after reading this book and went into, acting. And, but this book it's just a mindset book, but it's a really good book. And it actually takes 10 months to read it if you read it properly. And I've done it. And, there's several guys that I've given it to that have done it, and they're, some of the top people I know in commercial real estate that have read it are the top people. And it's just a great book, man. It really just changed my mindset on a lot of things. So,
okay, very interesting. Now I'll have to check that one out myself.
Yeah.
So appreciate it.
No.
Well, Jeremy, really appreciate your time today, and thanks for being on the Wealth Flow.
Yeah, absolutely, Keith. I appreciate it. Thanks for having me.
Yeah.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.